I have an hour to cover a topic that really represents the change, a social change, really. It's the development of an entire new field in terms of careers in banking. In this day and age where there's not a whole lot of, secured, continuous employment, this is the field that is going to be, because we're just at the start of an entire new sector, okay? So what are we going to cover today? So basically, we're going to look at what is the world of money laundering, right? What are the global and national standards? What is money laundering and challenges to preventing it? Some case studies, and then my closing thoughts. I want to get through this as much as possible so that it would allow you to ask questions about things that I think are of most interest to you. But hopefully some of the cases I've selected will be interest to you. So what is some of the things that you're going to have to learn about? If you were to leave this room at the end of today, there are a couple of acronyms I want you to get familiar with, because this is going to be a part of your life, whether you are a professional in the field or as a customer of a bank. And I don't think many people in the world are not customers of bank, although that's a whole new topic about financial inclusion. You would be interested to know that in the United States, the US Postal Service did a study a couple years ago that estimated 1 out of every 4 households, that's 25% of US households, do not have access to a bank account. Are you aware of that? It doesn't have to do with the AML, the money laundering prevention efforts, but that's an interesting discussion altogether, and that's a global social issue that the World Bank is working on. It's one of my favorite areas of focus in the work that I do now. So what are some of these terms? Like source of wealth, you're going to be dealing with that. CTF, counterterrorism financing, or combating the financing of terrorism, anti-money laundering, AML. This is an important acronym to remember, AML, because for those of you who sit on the boards of banks, and one of the compliance officers did a board presentation where they used the word AML, assuming everybody knew what it was, and after a 30-minute in, one of the board directors says, what does this have to do with asset liability management, which is ALM? So then I start saying, let's not assume everybody knows what AML stands for. FATF, Financial Action Task Force, I'll explain what that is. In the US, currency transaction reporting, suspicious transaction reporting, and the US calls it suspicious activity reporting. I'll explain that. Financial institution, CB, for correspondent banking, and customer due diligence, enhanced due diligence. So if you walk out of here today and said, those are the things I learned, that's really great. All right. So first, to understand what is money laundering, you need to understand what is defined as a predicate crime. So that's practically everything under the sun, right? Racketeering, terrorism, financing, trafficking, human trafficking, drug trafficking, arms, corruption, bribery, fraud, forgery, counterfeiting, basically any crimes that's indicated as a crime in that jurisdiction. The newest one is this one, which is tax crimes. So tax evasion was added as a predicate offense for money laundering prosecution in 2012 as a global standard. Each country has had different type of application of this requirement, and I'll explain that later. So, how big is this problem? The world of transnational crime. The first official estimate was in 1998 by the International Monetary Fund, which estimated about 2 to 5% of global GDP, or $900 billion US. Think about that. How much dirty money flows around the world economy. The latest report that was updating it was the United Nations Office on Drugs and Crime report in 2011, which puts it very consistent with the IMF number. 3.6% of global GDP is illicit proceeds, right, running around the world. What percentage of that is laundered money? So 2.1 trillion, the global economy, money laundered 1.6 trillion. To put this number in context, if you look at the global economies, the GDP of each of the countries, I highlighted the ones that are prevalent to me because I'm based out of Asia. It's Hong Kong, China, which at the time was the world's third largest economy, which have since, of course, surpassed Japan. And the other piece of data from this report I want to highlight, I'm waiting for this to respond, is the socioeconomic cost to illicit drug proceeds. This report talks about what the impact of the economy. So the ratio of socioeconomic costs to the economy from $1 of illicit drug proceeds, it's a 2-to-1 ratio globally, and the United States is 3-to-1. So every $1 of dirty money from drug, it costs our society 3 times to address all the issues associated with that. The last piece of data from this report that's really depressing is that less than 1% of these proceeds of crimes are ever seized. So criminal organizations, if you think about what they do, and if you look at global enforcement statistics, irrespective of country, more than 95% of all crimes you look at that are committed is actually profit-driven, right? The rest is what they call crimes of passion. So when you think about these proceeds of crime, the banks, have a lot of resistance to this, right? They're being asked to detect illicit money. But what's happening to us is that we as a society needs to recognize the very social ills that we want to be protected from, that we don't want in our communities. They thrive on the ability to launder these proceeds of crime. And for them, imprisonment is just a part of committing these criminal acts, right? Because less than 1% of these proceeds are seized, that means that they go to jail and then they come back and they can enjoy the proceeds of crime, that $10 million home or whatever it is, right? So, what are the guiding bodies in this space? The Financial Action Task Force is a global international body of members. So, think of the United Nations, where countries belong in it based on political sovereignty. Because the Financial Action Task Force is focused on money laundering prevention, counterterrorism financing, everything related to those 2 areas, countries are recognized on an issues base. So that's why, even though you will have Hong Kong, which is now part of China, never listed separately from the United Nations, you will have them listed separately in the FATF. They were part of the FATF in 1991. China, on the other hand, was only admitted to the FATF as a member in 2007. So it's an interesting time, for China to be seen as a global power, but in this space, actually one of their, it's one country, 3 systems, if you put in, include Macau as well, but Hong Kong is actually one of the major financial centers in the world. So the Basel Committee is another international body of banking supervisors. The Wolfsburg Principle is made up of 13 global banks. The European Union directives, this is the only international body whose requirements on AML is actually mandatory. So all members of the European Union, once the EU directive is put into effect, they must enact it within 2 years. So the latest one is the EU directive, the 4th EU directive. Then other laws in the US that have extraterritorial reach. So while the US Patriot Act and the Office of Foreign Assets Control, OFAC, which is relating to the sanctions program, is US-based, but it has extraterritorial reach. Why? Because when I go through the example what correspondent banking does, it involves the processing of US dollar payments. That's where the extraterritorial reach of US laws and regulation come into play. And last and not least, but the Egmont Group is basically a group of financial intelligence units. So if you think about every country has it. In the United States, it's FinCEN. Other countries have the JFIU and so forth, but their objective is to gather suspicious activity reporting and then return back to the industry to advise them what are the trends that are coming out, right? Where are the risks to the banks? Okay, all right. So I'm highlighting 4 key national regulation because these are the 4 major financial centers. Outside of the US and London, the other 2 major financial centers is in Asia, Hong Kong and Singapore. In fact, Singapore just surpassed Hong Kong as the 3rd largest financial center in the world. So what are the regulations? In US is the Bank Secrecy Act of 1970. So for those of you who work in this space or you're customers in this space, one of the things you're going to get familiar with is the BSA officer. This is their job, right? In the UK, quite a number of laws that have been revised, like Proceeds of Crime Act 2002 that was amended in 2013, and so on and so forth. The Hong Kong, the Anti-Money-Laundering Ordinance of 2012 that went into effect. It doesn't mean that the countries who have recent laws doesn't mean that they have not been complying with the AML requirements. It's just that they didn't have a dedicated law to that fact. And Hong Kong that was one of the criticisms they had. As a member of the FATF, they were evaluated through the mutual valuation process, which basically, like having a bank examiner come into the country and evaluate how you're doing on your AML compliance. The last piece, of course, in Singapore is Monetary Authority of Singapore is the primary regulator relating to Notice 626. Okay. So what is money laundering? There are 3 stages to it. The first one is placement, dirty money, right? So the predicate crimes in the beginning, proceeds of crime needs to be laundered. Placement means it has to be introduced into the system somehow, because the objective of laundering is to disassociate the original funds from the ultimate beneficiary. You put it in the system, and then you layer it. What does layering mean? Obviously, I had this question from one of my professors yesterday when I was catching up with him. He said, well, as a criminal, I'm not going to say I'm a criminal and I'm going to go in and put in money in the bank, right? I'm going to use other means of disguising it. So this is the big challenge for banks, because oftentimes they have nominee shareholders, nominee companies, nominee, lawyers and accountants. Everybody remember, the firm, right, with Tom Cruise. I am your lawyer. I cannot talk about anything. I will forever be your lawyer, that kind of thing. Well, the U.S. was actually, in part of their assessment last year, will continuously be criticized for not including lawyers as part of the anti-money laundering requirement. Because what's critical to our legal system is the tenet of attorney-client privilege, right? The interesting thing is, in Europe, they carve out financial transactions, so the attorney-client privilege does not extend to financial transactions, so you must report it, right? But the U.S. does not. And different jurisdictions have different way of addressing this particular issue. So when you're talking about money laundering activities, the truth is, the biggest challenge to the bank is, the bank looks at you. You represent everything that makes them feel comfortable. They give you account access. The challenge is, are you still the same person that operate that account thereafter, right? So one of the things that we have to determine is, how are they layering this? Is it moving through multiple accounts? Here it talks about moving money through various around the world. Sometimes it doesn't have to. Even just moving through different accounts within the same big bank, like HSBC, kiting it through different accounts. Part of it is because the money launderers, criminal organizations, take advantage of the fact knowing that global banks don't work consistently, let alone moving from bank to bank within the same country. Or the worst part, or the most challenging part, is when that money is moved from one jurisdiction to the other, at which point the data privacy controls of each jurisdiction is going to prevent any kind of cooperation, right? So one of the big objectives of the Financial Action Task Force is to push for international cooperation in this space. The last piece is The last piece is integration, right? They've laundered the money, you see it as clean, and now it comes out and it gets integrated into the economy like it's normal money. So I have a question for you. If you have $1 million to invest, what's your objective? Maximize money, right? Return on investment. What does that mean for the economy? It means inefficient allocation resources. You're going to put money where it makes you money, it creates jobs, tax revenue, all the positive things for the economy. What if that money was dirty money? Dirty money comes from illegal activities. So any country that has defined it, so at the beginning we talked about trafficking, human trafficking, forgery, piracy, so anything that's considered a criminal activity in that country, proceeds from that is subject to money laundering prosecution, or should be, right? So if it's dirty money, what's your objective? Well, if it's dirty money, you want to clean it, right? So the way to clean it is not actually, if you really think about it, a lot of the challenge of detecting money laundering activity has to do with, legitimate company activities mingle with dirty money, right? The front companies that we see a lot, we think about. If you think about it, one of the biggest challenge is small, medium enterprises, right? The mom and pop shops, the one that's a keystone to the US economy, frankly, are very vulnerable to this because what they do is they can act like a legitimate business, but the actual money flows that go through it, who's auditing it, frankly, right? Right. You have tax return, but
under audit, explain somehow. Did you win this at a casino, or did you do this? Is this proceeds from your business activity, or what?
Yes.
You have a tax return. You can reconcile cash receipts back to a tax return of some sort.
But that tax return is predicated on the fact that someone is going, if you were the tax authority, and I ask this question in Asia a lot, right? If you're the tax authority, if you see a company reporting increased revenue, but the expenses may be consistent or slightly increased, is the tax man or woman going to say, excuse me, you just grew your business by 100%. Is your cost of goods sold commiserate with that growth? Am I going to come and make sure that, yeah, you did have an increase of 1,000 customers, so that means X number of beans have to be purchased? You're not doing that. All you care about is the bottom line. Well, more revenue, less expenses mean I have more reportable income. Exactly, right? So there is an inherent conflict of interest in the system that you think is supposed to authenticate.
A tax of 30%. I don't want any of my cash being taxed if I can help it. But if I have to give up 30 cents to clean it and stay clean, then that's the cost of doing business in the crime.
Well, so you're right. Criminals don't want to pay taxes, but for them, paying taxes is part of the process of legitimizing it. That's the piece that it's challenging for folks to understand. They think, well, criminals, they're trying to disguise everything else. But actually, for them, paying taxes is one sure way in making sure that they actually get access to the financial system without raising any red flags. So, of course, they will never file tax returns that grows the business like 100% every year, right? It's just enough to keep laundering the money. But no one is actually going to go and say, well, you know what, I'm going to do an audit. I want to make sure that your expense receipt justify the expenses you've listed in your tax return, so that explains why your operating income has gone up by X. Yes.
As a tax authority person, audit that. Because if I'm running a service-related business that collects cash and not checks that are passed through my checking account, then I can put half the cash into my bank account as my business that I collect as let's say it's a CPA doing services, and I can put half the cash into my pocket and not report that.
That's true. That is true. But your thinking is based on the premise that your tax authority is operating efficiently and that it works well, right? So my work, so I've been doing this for 10 years now, based out of Asia. And I don't know if you're familiar with the development. So part of that objective of determining where the cash is, India went through a demonetization effort last year, right? Trying to move money back into the system. So there was this story, a real case. He didn't think it would be found out, but it was. So the Indian government had a limitation about how much cash each person can deposit. It was like a 50,000 US dollar equivalent. And he's a legitimate businessman. He just simply, wanted to keep a lot of things in cash. As it turns out, he ran out of family members who could deposit money on his behalf. And instead of putting in the rest, he actually had all these Indian rupees sitting in his one room in his house, equivalent of 6 million US dollars. I don't know if you know the exchange rate, but the Indian rupee is, 60 to the US dollar, or now 68, right? He burned it. rather than putting it back to the system. He burned it because he did not want to raise any red flag. Of course, he raised red flags elsewhere, right? Okay. But anyway, so this element is where, how many of you send money overseas? Anyone? Right. So for those who do, even in your basic, you send money from your savings account to checking account, and in your eyes, on online banking, you click and it shows up right away. There's a whole element of how banks process their payments that impact money laundering activities detection, right? But for overseas, this is the biggest challenge for the global economy, is how money moves around the world. In fact, a lot of the laundering activities is actually predicated on the ability to move money around the world, because they know the countries don't cooperate the way they need to, and so they find gaps in the system to move these money flows, okay? So correspondent banking, right? You are sitting in the US, you want to send some money to your family in Singapore, right? Or let's say the money from, let's put it the other way. Someone wants to send money to the US. Let's say you have a business in Asia, you need to pay money to services that you've ordered as a company in the US. So then you need to make that payment in US dollars. But of course, you're based in Singapore, you don't have the US dollar. And let's say that bank that you bank with don't have a presence in the US. So you require the correspondent banking relationship. That means you go to a US-based institution and say, can you process this payment for me? So in this case, you have the gentleman in the Netherlands. He needs to make his bank pay money to someone in New York. So he goes to his bank in Amsterdam, and then Fastbank is the correspondent bank. He sends his instruction over here, and then Fastbank has a relationship with FineBank, which is the provider of banking services to the auto parts supply, right? If you think through each of that process from a money laundering detection point of view and what that requires the banks to be able to figure out what's a money laundering transaction versus a non-money laundering transaction, right? They're just zeros and one. How do you detect the difference between something that is clean and not clean? And we'll go through that. But that's basically correspondent banking relationship. Now, why is this critical to the global economy? Predominant payments in the global economy is in US dollars. The only clearinghouse of US dollar is in the United States. So everyone around the world, when they need to make payments, it is what we call the operational currency of businesses around the world, the US dollar. It comes back to the US, and that's why it poses a lot of risk to the financial system in the US, because you have to provide these correspondent banking services. That's why you have a lot of foreign banks who apply for a banking license in the US, not because they think the US is a great growth market, but because one of the critical elements of their business is to be able to process US dollar, okay? So, okay, I'm waiting for this to reply. Okay, so from your perspective, what are you going to see? This is what the banks have to focus on now in this world of anti-money laundering, counterterrorism financing. KYC, know your customer, customer due diligence. How many of you opened an account recently in the last 5 years, right? Did you notice types of questions that are being asked that were really never asked before, right? Before, your driver's license, proof of address, and that's it. But now they said, well, why do you want an account with us? What are you going to use this account for? What is the expected transaction volume? What is the expected transaction amount, right? So this is what they're trying to determine. Why is that the case? Let's say a customer comes to the bank, and the customer says, why do you need this account? The customer says, it's to receive salary. Okay, you just got a job, you just moved here, you need a bank account. That's fine. But the bank has to be able to determine that, in fact, what he said or she said is, in fact, what he's going to use the account for. So what are the basic parameters of a salary account? For example, how much incoming money? How frequent should they get it? How often do you get paid? Let's be generous. Weekly, 4 times. Forget about the outward payments, right? Where should the money be coming from? Well, if you live in Amherst and you start getting money from Russia, that's a bit of a problem, right? Because it's a salary account. Unless you told the bank in the beginning, you're a consultant and you travel globally. Perhaps they build that into profile. But the objective of the KYC, the Know Your Customer and Customer Due Diligence program, is you identify the customer, so they give you the documentation. Now they have to verify it, because you know how much fraudulent documentation there is in this world? You can get it practically free, okay? And then the due diligence piece of it is, all right, I built a profile, I'm comfortable with this customer, they told me what I'm comfortable with, but do you really know your client yet? No, not until you start monitoring the activities in that account. So for us who are compliant, good people, I know it gets people nervous when I go around talking about, money laundering prevention, and like, why? Does it assume that everybody is doing something illegal? That's not the case at all. What we're trying to do as a society is basically say, money isn't just money. There's an ethical way of earning money, and then there's an unethical way. Because if we don't, as the US banking system or any banking system in any country is the backbone of the economy. If they don't do their part in detecting it, you're basically, everything you want to spend money on law enforcement and stuff, it's not going to do the job, because that dirty money is just going to keep growing and growing, right? So, number of things that, like due diligence and then name screening. So sanctions and all that, that's a little more technical. But ultimately, the bank needs to be reassured that every customer they onboard is someone who they say they are, right? So one of the biggest challenge to money laundering prevention is actually what they call mule accounts. So the mom, the pop, the kids who opened up the account, and the bank says, I built this profile, but until they actually monitor their activities, you don't really know for sure that that account is in fact used the way it was supposed to use. And we'll see it in some of the cases, right? So let me give you an example of complex approach to money laundering activities relating to international trade. They call this the black market peso exchange. Peso is a Colombian currency, right? This is an instance where you can launder money without ever actually moving the cash. It's called the transfer of value. So why is this called the peso exchange? It's basically saying, if you were a criminal organization in your country, you perpetrate all these criminal activities in the other country, how do you bring that money home to support your operations? And in this case, we're using the example of drug proceeds for the Colombian drug lords, right? But if you were a criminal gang operating in China and you needed to bring that money to support back to your criminal activities in China, then it's called a black market, renminbi exchange, right? So the key thing is, here you have the drug cartel selling money in the United States, US dollars. How are they going to bring that US dollar back to Colombia? Now, cash smuggling still is a big challenge, but this is an instance where no cash actually crossed the border. The drug cartel takes their money, they find an exchange broker, in this case a peso broker, exchange for US dollars and peso. On the other side, there is a legitimate businessman. He just bought goods and services in the US dollar. He needs to settle those invoices in US dollars. So he goes to an exchange broker. Now you ask yourself, well, why is he going to exchange broker rather than his own bank? Because exchange broker likely give them better rates, right? So he gives his clean money to the exchange broker, and what happens is that the brokers on either side of the continent just net it out, right? So they have the dirty US dollars that's already in the financial system. They help him settle his invoices, and at the same time, the broker on this side takes his clean peso money and gives it to the cartel. And the money never crossed the border, right? Now, the biggest thing is, how do you actually know this is happening? How do you know it's actually happening? At any part of the stepping of this process, can you actually see that this is a money laundering mechanism? The only way you actually know is at the point when the broker in the United States settles the invoice for the Colombian businessman. Why would you know? Because there's no actual economic relationship between the broker and the provider of the services to this guy. Why is he said, basically it's called third-party payment. Why is somebody else paying services for something they don't have a relationship with? And that's the hardest thing to detect in my field, is how do you determine third-party payment? If you think about it, you buy an insurance policy, right? When you make your premium payments, Is the insurance company saying, I want to make sure that Hue Dang, who owns this policy, is the one who's making the money for Hue Dang, right? By definition, you can't. All they see is amount, policy number, credit it, right? It's only after the fact they say, wait, this account isn't coming from Hue. It's coming from somebody else. But at which point the money's already gone through the system, right? So third-party payment is really, really challenging. For those of you who, think about the payment processing elements of it, the SWIFT system is what they use to move money around, or the federal wire here, right? By definition, there's no way for them to say, well, I want to make sure that Hue is sending money to herself and not. We don't, right? We want to credit it because that would be a huge impact on the economy if everybody has to check everything. What happens if they misspell my name? H-U-E isn't really easy to spell, right? They could say H-U or H-U-G-H, right? Because they think it's Hue. So that's why this third-party payment, but that criminal take advantage of this. This is how they launder their money. So I want to highlight one thing about terror and crime, right? So proceeds of crime, money laundering prevention. The three components that tie terrorist financing and money laundering activities, you have the suspect, so the criminal, the act, the criminal act, and money. In money laundering, the suspect commits the act, so by definition, the money is dirty. It's proceeds of crime. In terrorist financing, the suspect, their objective isn't the money. Their objective is the act of terror. So this money actually could be dirty or clean. That's why nonprofit organizations, charities have been such a target for determining terrorist activities, right? Because by definition, nonprofit organization has the trust of society. It was set up to do good. So the review and tracking and monitoring of nonprofit is not that same level as businesses, right? So this is the biggest challenge for banks, because banks set up their detection scenarios based on money laundering activities, big sums of money. But terrorist financing activities don't require a lot of money. The Bali bombing in Jakarta a few years ago only took $70,000 US. But most banks' detection scenarios is some above 100,000, right? So how do you do this work where you're trying to prevent money laundering activities and at the same time detect terrorist finance activities? And this is where the cooperation between law enforcement and companies and banks have to take place. Okay, so I wanted to go into the summary fines. I want to give you an idea of how big the penalties have been in the last few years, right? Coutts Bank is a big bank. So this is in Hong Kong recently. I highlight Hong Kong because they were fined for not following the KYC-CDD. The amount of money, so the big one here for the US is here, right? HSBC was $1.9 billion in 2013, right? BNP Paribas, we thought 1.92 billion was quite a bit until you came along with, BNP Paribas, who was fined $8.9 billion US, right? So you, like it or not, you are in this world where banks have to comply with this. But I think it's a good thing for us socially to make this statement that money isn't just money, right? And I want to highlight this thing. JP Morgan was fined $2.6 billion for the Madoff Ponzi scheme. Everyone's familiar with that. I want to go into that a little bit detail now. I want to talk about how he did it. Okay, I'm waiting for this to respond. Okay, so everyone know about Bernie Madoff, right? $65 billion over 30 years. All right, so what did he do exactly? He had access to, so when I talk about banking processes and how payments gets done, he had access to JP Morgan's 703 account, which is a concentration account. This is where money payments are all concentrated together, moving in and out of each account. What did he do? At any given point in time, he had like 10 accounts open, right? He would, on the day one of 1 month, move in put money into this account. On day 25th, he would move to this account and basically kite it, right? So let's say he put $1 million on day 1 of January. January 25th, he moved maybe 900,000 through this account and then move into account number 2. While that money is sitting in account number 1, it generated interest income. You ask yourself, how could he prove all these to his investors that he was making money on actual paper? I mean, in this day and age of internet banking, how often do you actually call your bank and say, my address has changed, right? But in the old days, when you moved, there were 2 places you want to make sure you knew where you were. One of them was your bank, right? Because you wanted to know your bank statement. So he had bank statements demonstrating earned income, right? And so basically that's what he did. And every time an account was closed, he was able to move on. But by having access to this account, he could disassociate himself and for the bank from the various accounts he held within JP Morgan. I bring this up because that $2.6 billion fine it was intended to go back to the victims fund, but still that's a very small portion of the $65 billion that he perpetrated over 30 years, right? And the key thing is the concentration account is an internal account. So how would a customer know about an internal account? This is not something that's public knowledge. So it begs the question, who is involved, right? The banks pay the fine for sure, but the question is, any accountability? And it's a difficult one, right? Because it was taking over such a long period. And the reason JP Morgan was fined was actually JP Morgan's UK office filed a suspicious transaction report about activities, but for whatever reason, did not share it with the US office, the headquarters. And that's when the US regulator says, you guys should have been communicating with each other, right? This all came to light in 2008, right before the global financial crisis. But there were folks in the SEC who had noticed it for a long time, and nobody wanted to believe it, right? So what did this guy say when he was sitting in prison? So these are his convictions and 3 counts of money laundering. He says, I'm not a banker, but I know that $100 billion going in and out of a bank account is something that should alert you to something. No remorse whatsoever, right? He's in jail for the rest of his life for sure. But that basically says, like it or not, the banks have a role in preventing these kind of illicit, ill-gotten gains, right? So, to give you some context of some of the cases that talks about, like in Hong Kong, knowing your customer. Hong Kong had a case where a 22-year-old high school dropout working as a factory delivery man, he opened an account with an initial deposit of like 500 Hong Kong dollars, which is like less than 100 US dollars, okay? And within 8 months, he transferred via internet. He never showed up at the bank again, over 13 billion Hong Kong dollars, which is about 1.5 billion US dollars, right? 4,800 deposits and 3,500 transfers out. And he received 10 and a half years in prison, right? The next one, had to do with an elderly woman who lives in public housing. The interesting thing is she processed $5 million, which is it's 800,000 US dollars over a period of 3 years, 17,000 plus transaction with the account. The accounts were closed, but during the prosecution, during her trial, her defendant said, well, she's an elderly woman. She doesn't know what she was doing. She didn't know about this AML requirement because the official law only went into effect in April 1, 2012. So you know what prosecution did? Brought up a police officer who took pictures of her apartment. And on her sofa were clearly, in English and Chinese, the Anti-Money-Laundering ordinance, right? So he said, how can you say you didn't know? Here's evidence in your house, on your sofa, stuff about the regulations and what money laundering activities is prohibited, right? Then this one is interesting. 2010, so this is like 7 years ago, well before the official law went into effect. This gentleman is a money service business. He processed quite a few, over 3,000 transactions as a money remitter. But the article wrote that he was put in 7.5 years in jail, even though the prosecution could not prove that his funds were of illicit gains. They simply proved that he did not do his know your customer due diligence. It was a message to be sent that this is something you need to ask. You need to know your customer and ask them where their source of funds and wealth come from. So this should be interesting. When I first mentioned this in the US, when they came to light, back in 2011, this is a case relating to a police officer in Hong Kong who makes a monthly salary of $23,000, which is about almost $3,000 US a month. And what triggered it was he was depositing over $1 million Hong Kong dollars, which is about $150,000 in the Jockey Club, which is the racing horse account. But he only spent less than $200 in trading, and he did it over a 3-year period. So during prosecution, they wanted to know where his money was coming from. And he first said, oh, well, I own a house and I sold it. But of course, they checked and found out that he never owned any property. Then he said he had a business, which they checked, and also was able to find out that he did not own or register any business because he couldn't prove where his source of wealth is coming from. By definition, he was laundering money. He was the front man. So he got 3 years in prison. Now, if you think about what that means, you as a customer bank, going forward, you're going to have to explain unusual patterns of activity. It doesn't mean the bank assume that you're doing anything illegal, okay? Understand what they're doing is figuring out why is the typical pattern of activity associated with this customer has now sent out an outlier. Why all of a sudden? And it's very easy. Let's say if you got an inheritance money, the bank will say. Now, the challenging piece for the financial institution is this piece having to do with you're not supposed to tip off your customer about any potential illegal activities. But you are supposed to find out from your customer if something unusual is happening. So how do you determine whether you're tipping off? Because tipping off means prison time for the bank, right? For the banker. There's individual liability associated with that. So this piece of when do you ask the customer, well, can you prove this money? I think a big red flag is the customer says, no, I'm not going to tell you anything. You should expect some further quick follow-up from the banks, okay? So 1MDB, everyone heard about this? This is the big Malaysian sovereign fund. The Prime Minister of Malaysia was involved in it somehow. The reason I bring this up has to do with the fact that this is a case that involved a lot of jurisdictions. Singapore, obviously Malaysia, the US, the Swiss, right? And basically what it meant was, if you look at what ended up happening to the banks that were part of this in Singapore, had to do with 2 Singapore banks, BSI, they lost their banking license. And I bring this up because in this world of money laundering prevention and terrorist financing detection, things that banks used to think was okay to do, was in fact now being looked at in different lenses, right? So those different lenses actually require you to be able to explain. One of the things, 3 bankers were sent to jail in Singapore, and it's because at the time, their boss says, go ahead and do it. No questions asked. And now it's looked at differently in this current world. So what banks are trying to figure out is where is the line in terms of making sure that you're not only doing what's right now, but also anticipating where the world is going to be 10 years from now. Will you be held accountable for something that looked okay, and then 10 years from now, actually it did not look okay? I don't think this is going to work. Oh, good. So India had its fines as well, right? It's a big thing for India to fine 10 million US dollars, in an economy where the per capita income is like $80 a day. It fined actually 22 banks for ineffective KYC CDD. And then, okay. I want to talk about why I'm here. So I head the association, which is currently made up of over 45,000 members globally in 175 countries. Mind you, 175 countries, that's bigger than the number of member nations in United Nations, right? And my objective is really to help build the community, because these four key pillars, the government sector, the industry, the banking association, working universities, so I do a lot of lecturing in universities. I was at an event in Macau a couple weeks ago, and we talked about raising awareness for those working in banking or financial services. But this gentleman talked about, actually, we need to start doing about even earlier than that. He said, you need to capture them right after you graduate from high school. Because he said, what's happening is that young kids are approached by friends, strangers, said, hey, you're graduating. You open them an account for me, and I give you a nice graduation gift. And these kids don't know any better, right? They said, what's the big deal? I open them an account, and I let someone else use it, right? So raising awareness about what this space is and why we're doing what we do. For me, my two biggest passions, especially based in Asia, I've lived here for now 20 years, is corruption money and trafficking money, right? To me, those are evil things to take place. Corruption is unequal access to the resources of a country in which you belong and have equal access to. Trafficking, human trafficking, drug trafficking, but the human trafficking, that's just pure evil. And my association works very closely with a lot of nonprofits who are trying to make banks understand that money isn't just money. It's an extraordinary war. I mean, those of you know what I think a CNN project on Polaris and the anti-human trafficking work. It's very challenging for banks, because banks, if you think about human trafficking, you think, oh, it must be obvious. It's not obvious. If you think about, for example, the seafood we eat and how those ships get people to live year in and year out on a boat, they're not there by choice, right? And President Obama closed a loophole in some of the import relating to that a couple of years ago. It was great. But money laundering activities really is something that we don't think about. We just think of money. But the elements in which that is not legitimately earned, the element that is part of the fabric of the criminal world that is being integrated into our world, which we, as law-abiding citizens, we should not tolerate it, right? And banks should not be inadvertently facilitating their activities by simply saying, well, my job, we are just financial intermediaries, right? So that's it. We have time for questions. Okay? Anyone? Yes, sir.
You talked about the section of criminal activity and terrorism. I mean, just at the end, talked a little bit about corruption. I heard recently about in Brazil, where they were talking about politics and corrupt money and how it brought down the whole government and so forth. I mean, how much of this money, or is there any kind of an investigation into how much of this illicit money is making its way into politics and corruption?
Well, I think the amount of money flows of corruption money is dependent on the jurisdiction. I don't have, I mean, it's bigger in some than in others. Without embarrassing, my objective is to bring in the key stakeholders, however long it takes them. So in Asia, it's in varying stages of adoption, recognizing the importance of money laundering detection. And I will say that there are some countries where they have what they call accepted level of corruption, right? Everybody sort of acknowledges that it's an informal line, and then once you exceed that, we're gonna come after you, right? The bank's job, so banks have different ways of identifying potential exposure to corruption money. For them, one of the terms that I didn't include was politically exposed person. So these are bank accounts held by political officials, right? And the idea is that you recognize that if someone is designated as a PEP, that means that should be enhanced due diligence, enhanced monitoring, figuring out where the money is. We're not saying those who are designated as a PEP is a corrupt official. We are just saying that in their position of, high political office, the potential exposure to money laundering, to corruption money is there. And so then the bank must do its job to detect it, right? So there are a lot of corruption monies running around the world. The PEP? Yeah. Definitely. They should be. Then they are. But the question is, what is the bank exactly going to do about it? I answer this question in this way. So in the United States, all publicly traded companies are largely held by the public, right? But in Asia, a lot of publicly traded companies are actually not publicly traded, right? There's a tycoon, some family. So you're looking at ultimate beneficial ownership. So in the United States, FinCEN, your FIU, the US FIU, just issue an ultimate beneficial ownership customer due diligence rule that will go into effect next year, okay? Basically making sure that you understand who has ultimate control of the funds. And in Asia, the conglomerates, right? I mean, in South Korea, you have the chaebols, and you have the big families that control everything. So even if you do your customer due diligence and you say, okay, well, he's a PEP, but who actually has control? It may never be visible. And let's say you can actually do all the, scaling and figuring out where they all sit, but it's that matriarch, the patriarch, who really has control, even on paper, even if they're like disassociated 10, 20 levels away, right? So that's the challenge, right? At what juncture? Yes, sir.
One, you had a list of all the banks that were up there that had fines. I think it's perhaps important to note that those weren't always situations where the banks knew that they were actually participating in anti-money laundering. They just happened to be the vehicle that was used. And perhaps for their own lack of due diligence, maybe they had one person in the bank that knew. But it's not as if there's a whole bunch of corrupt banks out there.
No. So let me just be clear, right? So the examples that are highlighted, they are fined because it's systemic. Some of it, the BNP element of it, the BNP Paribas, $8.9 billion, was actually, a lot of it was sanctions related. Like they actually, deliberately try to advise clients how to basically avoid the sanctions requirement, right? But I think that when you see these fines, it reflects a systemic element. We're not saying they're corrupt banks, but there are flaws in their system, right?
Most of it, maybe people noticed here that the United States shut down, or didn't shut down, they limited the way real estate transactions were done in Miami and New York last year. Because Miami real estate was actually being financed by a lot of illicit drug money out of South America, and New York's real estate was being financed by money coming out of Russia. And it was for this very reason that you've been talking about. So they really want to know your customer instead of having some LLC buy a building.
Yeah.
I noticed on that list of banks that were the two casinos. So are casinos, and I can see why, obviously, with all the cash coming in, are casinos still a major point for money laundering still?
So that's a very interesting question. So I'll answer by addressing the HSBC case. In the HSBC case, which is the committee, the Senate hearings on that case, you can actually Google and find some of the hearings, right? In their final report, they highlighted 5 high-risk customers. And one of them was Yanni Yogong, who was a Mexican-Chinese national who basically did all the drug stuff, right? So the reason that I bring this up is because the Las Vegas, Nevada Gaming Commission decided, hey, I'm going to see whether the casinos had any exposure to him. And as it turns out, Sands was, which was why they in part of their review process, it discovered that Yurgong actually came in and played with millions of dollars. And so Vegas, Las Vegas Sands was fined over $80 million for that. Now, You will see this, when I work with casinos, they always say, nobody comes to Vegas, no one comes to casinos to launder money, because our objective is for you to lose money, right? Why would you want to come launder here? So I want to introduce this thought to you. The concept of money laundering is to gain benefit from illicit proceeds. So with that, you apply it to casino. They lose the money, but they gain the benefit from playing from it, right? The enjoyment derived from illicit proceeds still exists. Because I encountered this, I do a lot of work with jurisdictions that have big casinos, and they always say, well, nobody comes to launder money here. Well, it depends on how you define laundering, and if you look at laundering in its purest sense, is gaining benefit from ill-gotten gains that you are not entitled to. Yes? Yes, yes, yes. But they're still, yeah. Yeah, yes.
In India, and how they were forcing everyone to deposit the money, but then they were also getting rid of these larger bank notes.
Yes.
How effective was that at kind of rooting out money laundering?
Well, I think it helped. Well, I'm not sure their objective really wanted to know where the money flow was coming from, right? And because of a lot of money being kept in cash, you can't really track it, right? And so I think it was effective in that regard. In terms of the benefit, the demonetization efforts, they still need time to figure out what that's going to do for them. But certainly getting the large money notes, right? I mean, the euro, the 5,000 euro note, they've been discussing about getting rid of long time, but actually one of the European nations really resisted getting rid of the big notes because they're still a largely cash-based economy. And nobody wanted to walk around with a credit card. They wanted the big note. Yeah, yeah, so. Yes?
There's no such thing as privacy.
So you still have your privacy, yeah? Is that what you? My objective is to raise awareness with you as a customer bank when you are being approached by your bank for any outlier activities. Understand they're not there to say, I know you're doing something illegal, right? They're trying to do their job, but it's part of a whole social change that's taking place. In the same way the movement of, minority shareholder rights of the, 20, 25 years ago, this is what we're trying to do as a society and saying, you know what, we're not going to turn a blind eye just because it is money, right? We're going to ask you where this money is coming from, right? The Panama Papers, right, and money's hidden offshore and all that. There's nothing wrong with estate planning. There's always been an existence for trusts to transfer wealth and all of that, right? The question is, where do you go from, estate planning, tax efficiency, tax avoidance, tax deferral, then tax evasion, right? And that's the world we live in now. We're trying to ask that question, and all the countries, there are 104 countries have signed up on what they call the Common Reporting Standards, which basically means that countries are going to share financial data with each other to make sure you don't find the gaps in their systems. And I mean, at the end of the day, it's about a level playing field, right? You play by the rules, so should everybody else. Why should someone get benefit because the system isn't set up to detect their activities? Well, there are other avenues of providing financial services that don't include the bank, and that's another challenge, right? You have large immigrant populations who don't, because banking services are expensive. They're not exactly, very convenient. So you have money remitters and money service businesses that exist in the economy for a reason, right? But you're an immigrant, you're not transferring, you're transferring, sending money over $100, $200. You're not going to use a bank for that. It's too expensive, right? Because the bank fee for a transfer is, $30, $50. That's half you pay, right? So in an ideal world, You want them all to be part of the formal system so you can identify where the leaks are. But we're definitely a long way to go from that. Yes. Yeah, so digital currency is another big challenge in the whole technology. At the moment, the U.S. IRS treats Bitcoin as under the sort of a tax jurisdiction as opposed to money laundering, right? But that's a whole new world because digital currency means no jurisdictional observation is all. It's all technology based, right? It's all hidden, and different governments are taking different views on it, right? For example, Bitcoin exchanges are not permitted to have accounts in China, for example. That's the Chinese government stand. But the Bitcoin providers believe it is a valuable part of the global economy. So it's still being discussed. 10,000. Yes. Yes. Payment platforms. Yes. PayPal. Yeah.
Are you worried that or even if I go to buy a small number of £30 or whatever, I'll go and do it on the internet. Those things have to be certain control. Right?
So
What's the question?
it's about the advent of technology and online payments and now being able to transact a lot of things digitally and online without using cash. So I'm actually speaking at a panel in London at the end of this week about technology and the role of financial technology and what it does in terms of the efforts in money laundering prevention. You're right, and the banks are struggle with that because they're moving at such fast pace, in terms of this space. I don't know that we have the answer to that one just yet, but definitely the risk is there, for sure. Yes?
Banks at least know the laws.
Yes.
And yet there's a growth of all sorts of fintech firms here,
Yes,
both in the
fintech.
United States and elsewhere. And oftentimes they're run by essentially entrepreneurs and internet gurus who really don't know banking laws.
Yes.
And they're lending. And it's my impression, but no specific evidence, that they actually could be committing money laundering without being aware.
We are working with that. So part of our community building efforts, making sure we reach out to key stakeholders, right? The likes of Facebook and other, online social platform. They are also building, payment and other financial transaction capabilities. So we are engaged with them as well to make sure that they're not inadvertently in their push for technology advancement, that they don't find themselves in trouble by not knowing what they're doing. Yeah. Yeah. Okay, there's another session. Thank you.